Sukesh Ranjan, who works as a manager in garment factory in Panipat, has invested 10 lakh rupees in an FD. On this FD of 6 years, he is getting 4.25% annual interest rate. After RBI increased the repo rate, almost all the major banks have increased the interest rates of FDs. Currently, the interest rates on bank FDs of 7 days to 10 years have been increased to 2.9 to 6.7%. Some NBFCs are giving returns of more than 7%. Sukesh is really confused about this. Sukesh is unable to understand what to do with an FD he had opened earlier. This dilemma is not only of Sukesh. According to RBI data, as of December 2021, there are 89.56 lakh crore rupees logged in term deposits with the banks. Lakhs of people who have deposited this money will be earning lower interest rates as the rates have been hiked only recently. What should these people do to earn more returns on their FDs? In this regard, banking expert Anil Upadhyay says that if you have opened an FD at low interest rate, then you have many options to earn higher returns on it. By breaking this FD, you can invest the money in FD with higher interest rate. In the meantime, you have to keep in mind that some banks charge a penalty for premature breaking of the FDs. Therefore, before opening a fresh FD, one should assess all the pros and cons of such an investment instrument. If the penalty is higher than the income you would earn by investing in the FD with higher rate of interest, then there is no sense in prematurely breaking the FD. However, some banks do not levy any penalty for premature breakage of FD. In such a situation, breaking the existing FD and investing in a new FD with higher interest rate can prove to be a good option. There are many categories of banks like PSU banks, private banks and small finance banks. Among these, private sector banks are offering attractive interest rate on savings and FDs. Many banks like Ujjivan, AU Small Finance are offering interest rates of up to 7% per annum on savings account. Interest income of up to 10,000 rupees on savings account is tax-free in a financial year, whereas the interest earned on FD is added to the annual income of the investor. He will have to pay tax on this income on the basis of his tax slab. So it would be better that rather than opening an FD which gives 4 to 5% rate of interest, you can deposit this money in a savings account and get comparatively a higher rate of interest. These private and small finance banks are also registered with the Reserve Bank of India. Now make note that you never forget the maturity date of your FD. Mere investing is not enough if you want to earn from FDs. According to the new rules of RBI, if the FD matures and due to some reason its amount is not credited or if you do not claim it, then the interest will be computed on ROI of the savings account if it is lower. So if you do not claim the maturity amount of the FD, then you will get lesser interest on your investment. Earlier, if the tenure of a customer's FD has ended and he had not approached the bank for renewal, then the bank would automatically renew it by the same time period. So the investor used to earn a fixed rate of interest during the entire tenure of the FD. The investors used to remain completely relaxed. But now the investor will have to remember the date of maturity of the FD well in advance.